Hello everyone, another exciting day in the world of global financial markets. Actually, to be honest, there wasn't a lot of new developments in terms of economic fundamental data. Overall though, I think things are still a softening trend for the global economy, the US economy, European economy, and the Chinese economy, which makes you wonder why you would be aggressively buying stocks now. Of course, a little bit of bargain hunting never hurts, but we did see in the price action, remember I did say yesterday we're going to see some buying yesterday. And that's what we saw in the New York session. So now over the next couple of days, we have to decide whether that buying is a sustainable recovery from the previous selling period. Of course, the rally so far is very modest compared to those declines of the last couple of weeks. And this is the case too for stocks like Tesla. Good rally, very good rally, but only marginally retracing previous losses. Apple still looked to be struggling in its rally, and we saw again this kind of idea of Main Street's living in a different world to the Wall Street tech like meme stock trading world. In other words, we saw a good real world economy stock like Johnson & Johnson fall sharply. We saw the Dow Jones fall slightly, but when it came to driving up the S&P 500 index, it was tech stocks that were doing that. And again, I'll make the point that this year we've seen six or seven companies rally the S&P 500, whereas 493 companies have only gone up about 3%, even less at this point, indicating there's not a lot happening in the real world economy out there in the United States. It's still the case that those seven big tech names are up 60%. Of course, we've seen an over 10% fall in Apple recently as the share buyback stopped. But I think this rally, do not take it as a necessary indication on the day, which I expected, and I'm still a cautious bear. Do not take it as an absolute signal that the worst is over yet. Could be the case. But I'd require sort of a couple of days of building on this immediate rally, this immediate Monday morning effect, which has become quite common of late, that the market tends to buy on Mondays. I think fund managers have a good think about over the weekend about how much money they still receive every month on their desks, and therefore they have to put it somewhere, and some of it has to go into stocks, and they do a lot of that buying on Mondays. So a little bit of support there from those sorts of forces that, we don't often talk about. But overall, I'm still very skeptical. The US dollar, is it running out of steam here? Maybe it is. So I'm rather neutral on the US dollar here. Gold and oil, I think gold is oversold. It could be more oversold. Oil, I think, has had a very strong rally. It's had a little bit of a correction. I'm a fresh buyer of it on the day. Energy prices in Europe natural gas prices in Europe continued to skyrocket yesterday. So we're seeing a big sort of turnaround there. And this risks an energy inflation pressure in the European economy going forward. And this is something the ECB and Lagarde will be paying a great deal of attention to. And it means, of course, there's no rate cuts coming, of course, from the ECB. In fact, there could be more rate hikes. We have Jackson Hole at the end of the week. And I think the message there from Jerome Powell, from the US perspective, is going to be a little bit positive, actually. So a little bit bullish. He's going to say things like it's good to see inflation back near its target range, headline inflation down near that target range at last. And he's going to say that's all because of him and the Federal Reserve. But I've always highlighted this was a self-defeating inflation wave that should just be allowed to run its course without adding to the pain of consumers and businesses by raising rates. But he will claim that he's doing a good job, that interest rate hikes are appropriate, and that's clear in the headline inflation number coming down. That could encourage markets to do a little bit of buying, so watch for that on Friday. However, he will counter those remarks, so it'll be interesting to see what really hits the headlines out of all the remarks he makes in his speech, but he will counter those remarks with comments along the lines that there's still risks for energy rekindling inflation, and we've seen the higher oil prices, we're seeing higher gas prices, and he'll also highlight that services sector and price growth is still a great concern to the Federal Reserve, as well as the case that wages could be could actually even accelerate from their already high levels. And that is very worrying to the Federal Reserve because historically speaking, it does not want to see a wages prices spiral getting underway to the upside. And certainly there are signs, and I've said for several months, 6 or 9 months now, that that's already the case. So what they're fearing is already happening. They're just trying to avoid seeing it that way. So that remains the support for Fed funds rate staying where it is or moving higher. One of the things he may say at Jackson Hole is that, further rate hikes cannot yet be ruled out. So that's something to be aware of as well. So a very balanced, various points from the Federal Reserve coming soon your way from Jackson Hole. Overall, though, I think we just have to accept that China is the only nation that's adopting policies to support a slowing economy, and therefore the European and the US economies remain highly at risk, which still leads me to suggest a defensive approach to your equity portfolio at the moment. Hope you have a great day. Clifford Bennett.